Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, August 27th, 4:25 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what you need to know for next week, and update the world famous 21 over 21 leaders list. We also will talk about sector strength and weakness, and also take a look at buys and sells that we made in-house this week in the portfolios. So let's get right to it. State of the market. Uptrend, but not just uptrend, full uptrend. If you look over here, there's no yellow arrows lurking, which means we've got complete unanimity. Is that a word, unanimity? I think it is. We've got market leaders bullish. We've got our short-term moving averages on the 5 major index all above the short-term 21-day exponential moving average. Also above the medium-term 50-day moving average. We finally got some strength in small caps, got them above the above the 50-day moving average for a weekly close. Good stuff there. And of course, we've been above the 200-day moving average going back to last July. So this is what we call full bull. And we will ride it as long as it continues higher. That's what we do here at Revere Active Management. We monitor the markets and the leadership of the markets and ride it higher. And if things falter, turn sideways, turn down, we take defensive action to protect our clients' portfolios. So what happened today? Fed Chief Jerome Powell, I'm calling him LL Cool J. LL doesn't stand for ladies love, although maybe they do. This stands for leaders love Cool J Powell. Look at the green here after his 10 a.m. Eastern Time speech at the Jackson Hole Fed meeting, highlighted by the G5. This is our leaders index of growth ETFs, up 2.23% on the day. This is really what we like to see. Green across the board on the rest of the indexes, as it was definitely a risk on day. The market very much liked Fed Chief Powell's speech. S&P 500 up 0.9%, Nasdaq 100 up 1%, Dow lagging up 0.7%. It's actually good when the Dow lags. It's a more defensive index. And mid caps up 1.9%, Russell 2000 up 2.9% as banks and oil companies really had a strong Friday. So let's get into the meat and potatoes of the video. But first, let's take a look at the team running Revere. If you're interested in learning more about an investment approach that participates in leading stocks when the market's in an uptrend, and as I mentioned previously, takes defensive action when the market gets weak, give any of us a call. Dan is our majority partner, CFA, and president. One of the most knowledgeable people in the financial world. You can reach him, Dan at revereasset.com. Muriel might answer the phone if you call too. She's our office manager and handles onboarding of new clients. And if you dial 855 Real Wealth, you might get Dan, you might get Muriel. Either way, it's going to be a great experience for you. Tim is our short-term strategist and specialist in inter-asset correlation, and Hunter and Alex are junior PMs and research analysts, and they help me out quite a bit with the selection of stocks for our portfolio. So give us a shout or email any of us. 855-732-5932 is the phone. So let's get to it. We're going to start off, as always, with the 5 major indexes. Why do we start off with the 5 major indexes? Because 75% of stocks will track what's going on in the indexes. And here you can see, let's take a step back last week. So last week, Monday and Tuesday, we had all-time highs on the S&P 500, but leaders did not have a good day. And then the next 2 days, we had a bounce off the 21, but leaders again lagged Wednesday we had the Fed minutes come out at 2 o'clock, and initially no big deal, but a harsh sell-off toward the end of the day last Wednesday. We have been cutting exposure here as we had several stops getting hit. That's what we do. We get defensive. And then we had a gap down Thursday morning, but that gap down put in the low. Very similar to what happened back in May when we put in an initial low after things were looking rough on the indexes, but we had a gap down low and that put in the low. And that has really been what's happened over the last 7 trading days. That day put in the low. We had a nice close high in the range on Thursday, followed through Friday back above the green line. At this point, we're adding exposure back and also early this week as either adding back some things that we got taken out of or new buys. Strong day on Monday, Tuesday, and Wednesday with leadership. Thursday, we had a pullback really blamed on the explosions, the terrorist attacks in Afghanistan, but may have just been time for a rest after 5 days up off the bottom. But regardless, Jay Powell's speech today, the markets just took off after that and had a strong day, especially for leaders, as I mentioned, with the G5 index closing at all-time highs. Let's go to the Nasdaq 100. This tends to lead the markets up, lead the markets down. You can see a similar situation week Tuesday, Wednesday, bounce off the lows after the gap down on Thursday, follow through on Friday, Monday, Tuesday, Wednesday, pull back on Thursday, all-time high move on today, Friday, after Powell. Let's go to the Dow Jones Industrial Average. So you can see this broke out above this 351. That's like 35,100. Had a breakout 3 weeks ago, failed breakout, pulled back, but it bounced right where it needed to at the 50-day moving average along with the rest of the market. And then nice gap up on Monday, not a lot of progress, just going sideways, test and hold of the 21-day moving average on Thursday. Not quite back to all-time highs, as I mentioned, but this is understandable. Lack of relative strength here over the last week and a half because starting with Thursday, we moved with that positive reversal, we moved to more of a risk-on type scenario in the markets where growth stocks are outperforming, and that comes at the expense of the Dow Jones Industrial Average. You can see lagging relative strength really over the last 2 weeks and a couple of days, but near all-time highs and is still holding this breakout area. Mid caps. We've been looking for some strength in mid, some sustained strength in mid and small caps for a while. Mid caps couldn't break out, but they signaled some strength as they started to trend above the 50 and the 21 days over the about 3-4 weeks ago. Breakdown last week, but same thing with the gap down in reverse. Strength on Friday, Monday, Tuesday, Wednesday. A little bit of a pullback on Thursday. Up near the top of the range on Friday on some good volume too. So let's see if midcaps can break out above this range, this 503 to 507.6 area. Any pullback should be held by this 500 price here in MDY, and we'll see where it goes. We've got some room to run. I'll show the NASI summation index in a little while. Look at the relative strength over the last 7 sessions. Mid caps and small caps, their relative strength line for the most part dictates what's going on in the growth stock market. And let's take a look at IWM now. Look at the relative strength there over the last 7 sessions and the big move. We've been talking about this for a while. Could not get above the 50-day moving average. Failed through the 21. Put in the low on Thursday. Nice day on Friday, Monday, Tuesday, Wednesday. Pullback on Thursday. Big day on Friday. All small caps, both growth and value, contributed. Still a little ways to go toward the top of the range, but that means we've got room to run. And if we see continued rotation into here, it means that the growth areas of the market that we traffic in will continue to outperform. Let's take a look at the 5 components of the G5 growth index that we use. First, we'll look at the value component of the Russell 2000. That's the IWN. That also exhibited relative strength. So small caps both growth and value over the last 7 sessions have been working IWM. So the first component of the 5, IWO, is growth. An even steeper incline on the relative strength line on this as we break above the 50-day moving average. Do note that we've got some room to go in this, but that's a good thing. IWO is the first component, FFTY, and you're going to see something consistent here. It's the last 7 sessions is strength and closing above recent week highs in these growth components. So the IBD FFTY fund, you've got QQQJ, which is the mid-cap Nasdaq 100, relative strength. You've got ARKK, this is the ARK flagship fund. A little bit of a mixed bag. Some weakness on in the middle of the week in this. So this is really for the week. It's the weakest of those indexes, but still making progress. We need to get above the moving averages here. And finally, PDP, all-time highs for PDP. And again, relative strength over the last 5 to 7 sessions. So we like seeing that, obviously, because as I mentioned, that's the pond that we fish in, growth stocks. And we'll take a look after I do the 21 over 21 at some of the changes we made in-house this week, some of the trades that we made. Still a lot of exposure. So let's get to the 21 over 21 leaders list right now. Actually, first we're going to go through the indexes, the spider components, the 11 spider sectors. So basic materials, we're looking at 2 things. First of all, where are we on a price chart relative to all-time highs? And then also, where are we on a relative strength basis? So mild relative strength in basic materials this week. Steels continued to be strong. Energy, big relative strength this week. Communication services, not much relative strength, but near all-time highs. Financials, relative strength this week, approaching all-time highs. Industrials, mild relative strength. Tech, a little bit of a mixed bag this week. Staples, you know you're going to see staples underperforming when we go to risk on, and that's exactly what we see here. Real estate, little bit of lagging early in the week. When we go to risk on, that's typical. Utilities also going to lag when we go to risk on. Healthcare can either a lot of it depends on what's going on with biotech. It can lead and it can also lag. In this case, it was a safe haven for some money. You can see the relative strength while growth stocks were pulling back, but gave back some of that this week, but still trending nicely above the 21. And finally, consumer discretionary relative strength this week. So those are the major spider sectors. Let's go to the 21 over 21 list now. Take a full look. We had 2 stocks come off and 2 additions. There's 11 broad sectors, 18 industry groups represented here. They're in inverse order by numeric sequence. The higher numbers are ones that have been added recently. So stocks like FTNT, AMT, CMG, these have been on this list for multi-weeks as they continue their trend above the 21-day moving average. So let's get started. First of all, what we dumped this week. Snapchat, really disappointing action here. We had a decent sized position in this that we started to cut after this. We acquired it after this gap up and this gentle pullback right into the 8, acting exactly how it should. Then a failed breakout on 810 kind of changed things. And this is where it started to lag on a relative basis. We broke underneath the 21 and also broke below the pivot from this base breakout here. Very disappointing. But on Monday we gapped up, so let's give it another chance. What's going to happen? We didn't buy it, but really we're watching it to see what happens with it. We closed the prior week right on the 21, but couldn't hold that. And look at the relative strength this week. Growth stocks should not have done this week. It closed right on the 21, but the 21 is flatlined. It keeps failing, no consistency, no follow-through strength. Took it off the list. Second one, Carvana. This has been strong for a while. Look at the uptrend here after earnings. A lot of volatility came into it, and no progress since its earnings report, and it broke through the 21 on volume today. Carvana comes off the list. First two stocks in the list are what replaced it. Reminder, if you see a red flag over here, it means we own it in-house. So we got into DraftKings this week. DraftKings is one of the dirty 30 stocks. Those are stocks that corrected 30 or more percent starting in February till their bottom. And then it went sideways on a relative strength basis for a while. But since its earnings report, it's picked up relative strength. I've got highlighted here where they had earnings, ran into the 200-day just sideways, lighter volume pullback with a volume dry up, just like we'd like to see on the 21, and then a springboard higher on Tuesday. Started Monday, followed through on Tuesday above the 200-day and above this 55-ish area where there had been resistance. Didn't buy it there, but added as soon as it broke back above that area on Wednesday. Lower volume pullback on Thursday, and this 60 area is pretty big resistance here. Look over here how it battled 60, which acted as support until it finally broke down in late April, rolled over. We get through here, this will complete the right side of the base, and we got a half size position in this right now, looking to add to it if we see continued strength. And then the second one that we added was Devon Energy. We bought this on Tuesday. Oil stocks started improving their action Friday and Monday, and Devon was one of the few that was above the 50 and the 21-day moving average. So we bought this and have seen some nice follow through. Look at the relative strength on Devon, and that's what we saw in the energy sector pretty much all this week. So back to the holdovers. Zim looked long and hard at buying this off the 21 last week, but just didn't pull the trigger. Tried to break out and just reversed today, so it's hanging near the top of this cup. This is really just putting in a little bit of a late handle, which is typical of growth stocks that hadn't paused on their way up. In mode, got stopped out on this when it broke below the 21, but it reclaimed it by the end of last week. Fantastic week this week with volume. Upstart, this one is just looking great, has the potential to be a big leader in the market since it had this big earnings report move up and follow and continuation to day 2 and day 3 after the earnings report, got to the top of the cup, went sideways for about a week, pulled back near the 80 MA, and now continuing higher. Dexcom, nice earnings report, pulled back right to the 21, and now is slowly trending higher. Datadog, couple of in and outs on this in the portfolio. This can't seem to make up its mind. A false breakout yesterday with volume. We added to it where it broke out, but it held right where it needed to, and then a nice 2.7% gain today, back above the 8. However, volume lower than the sell-off day, but we've got one of our larger positions in this. Not a lot of gains in it, but it's set up to, and of course, we've got our tight stop as always. Zoom Info, this thing is battling at the 63 level for a while, finally closed above it today. Let's see if we can get any follow through next week on it. Steel Dynamics, extreme strength out of this base here. We took our profits on it. It pulled back hard, looking to possibly get back in it with a little more strength above the highs over the last couple of days. Square, this is another one that disappointed, very similar to the way Snapchat did, where big earnings movement, perfect volume patterns as far as strength on up days and lower volume pullback days followed through. I was very excited about this here. Got to the top of its base. We had about a 7-8% position on, and then it just couldn't make any more progress. And then leading stocks started pulling back. Then it broke to 21, and we got stopped out of bits and pieces of the position the whole way down. Monday, above, nice day, back above the 21, but not a lot of volume there. Light volume pullback Tuesday, Wednesday, Thursday, but it couldn't hold the low of that gap up day. The strongest stocks that gap up day, that's an inflection point. They really didn't break below there, and they've continued higher. This is one that did not. Very similar to Snapchat. I haven't taken this off the list because the 21 hasn't rolled over, but one close below the 21, back above it today, but really no volume there. I'm not having a lot of confidence in the way Square's acting. Zscaler, beast. Trending sideways above the 21. Big week for cyber stocks this week, sparked by PanW's earnings release, and also CrowdStrike getting added to the Nasdaq 100, and that followed through to the rest of the sector. There was also a big White House cybersecurity meeting this week where a lot of companies pledged to put more money into cybersecurity, and this is what we see in the charts, is what's being reflected in the fundamentals also. AMD, this one's been a little bit of a disappointment too. Since this big move up to 120, harsh pullback, we got stopped out below the 21 day here, but it bounced right back and now followed through today. This is high on our list to get back into, but we're riding NVIDIA higher. I really big stocks like that I don't normally include in the 21 over 21, but we have a pretty decent sized position in NVIDIA, and that's how we're playing the chip sector. So next up is LC Lending Club, big move up on earnings. We took aggressive offensive profits in this one. It just got a little bit too extended, then started to break the 8. It held the 21, gapped up, but really just middling relative strength this week. But it's had a nice run since 20, from 20 to 29, so that's a heck of a gain there. Costco, relative weakness this week, not a surprise, following up 3-4 weeks of relative strength, and this is really a consumer staple. And staples underperformed this week as we went to risk on earlier this week and to close out the week, so not a surprise to see Costco start to lag. Albemarle, chemical company, huge into lithium, pull back to the 21, bounced right where it should last week and followed through the upside this week. Lululemon, I got stopped on this below the 21, looking to get back into it. I really like this dry volume here. If it moves above the highs of the last 3 days, I'll be getting back into it. Avantor just continues to trudge higher little by little, right above the 21. Easy hold, but not a lot of progress being made. Net, this is one I've got high hopes for. Look at this 3-day volume dry up over the last couple of days, right to the 21, and then higher volume today as it moved off of the 21, and another one of our larger positions. CMG, perfect entry here, would have been off the 21, haven't bought it. Still going sideways here a little bit, strongly considering adding this back to the portfolio. Got stopped out of it, unfortunately, before earnings, and just part of our risk management. We had no cushion going into earnings and then didn't buy it back on the gap up. American Tower, another one that lagged this week, not surprising. We want a mixture of some I don't know what let's call them GARP plays, growth at a reasonable price, pullback, holding the 21, and finally Fortinet. This thing has just been a beast, except for this 1-day shakeout on earnings, bounced off the 21 and at all-time highs, and that's your 21 over 21 list. So let's wrap up now with changes we made to the portfolios this week. We added to Dexcom about a 6% position in this. This is just acting. We couldn't really ask for much more in this. Just headed sideways, bounced off the 21, now riding the 80 EMA higher. That was earlier in the week. We got into ETHE, Ethereum, as it broke above this. This is a big resistance level right here, this 31 level. It corresponds on the crypto 61.8% fib retracement, which is a big level if you're into Fibonacci numbers. Failed breakout on Monday, gentle pullback right where it needed to hold, certainly within tolerance, and then moved off of that this week. Let's see if Ethereum and Bitcoin can break above their resistance areas this weekend and give us a nice surprise to open on Monday morning. TTD, We started this position on Monday, added to it on Tuesday. No volume really has come into this, but on the pullback days, volume has been just microscopic. Not much better on the days up, but this big move up on earnings, it didn't hold it, but it's consolidated it nicely. Bounced off the 50-day and the 200-day, so huge support here. Very low risk entry. We're up just a couple percent in this, but it's a great setup to move higher. We talked about Devon, DVN. We added that on Tuesday. We also added more to Datadog this week, twice on attempted moves out. Haven't been rewarded yet. In fact, like I said, I think we're about flat on this, maybe up 1% or 2%. DraftKings on Thursday. I showed that as what we got into. Sorry, this is Wednesday, DraftKings. 2 buys on there. And then Thursday, got into DOCS, DOCS, on this pullback to the ADMA. We sized very small because this has a large average true range of about between 8 and 10%. Filled the gap this morning and bounced nicely. If we see continued strength on this, I'll be adding to this week. This is showing some leadership characteristics too, since it's gap up on earnings, and you know how we love those earnings gaps up in under-owned stocks. So that's going to wrap it. As always, love to hear from you on Twitter at Vandenbord, email don@revereasset.com, phone 855-REAL-WELL. So really going into next week, let's wrap it up this way. We're at all-time highs. The key area in the market is the the lows of 2 Thursdays ago on the 19th. We held the 21 and or the 50-day moving average that day. The 50-day now has gotten above the low of that day, which is a good sign. So you've got double support there. So any pullback should be contained. And let's see, on a percentage basis, that's only 3%, which is good to see. I like that. We will get extremely defensive if we break below that area. Right now, our downside is about 4.5% on the portfolios before we would get taken out of everything. And that would happen if the market rolled over and we break below these lows of 2 Thursdays ago on the S&P 500 and also on the Nasdaq 100. You can see the 50-day moving average is now above that key level on the Nasdaq 100 also, 3.8% above the 50-day on the Nasdaq 100. So those are your key areas to watch for next week. Finishing up the week, ending August 27th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.